Today we are looking at one of the largest e-commerce companies in China. We're looking at JD.com Inc., ticker symbol JD. We're going to be looking at the fundamentals of the stock, then giving my fair value based on discounted free cash flow and the Buffett-Graham intrinsic value. This is the stock chart over the last 5 years. You can see it's had a crazy run up from 2019. It hit its all-time high at around about $108 a share, had a drop off and then rebounded strongly in August from $60 to around about $90. As you can see, it's $89.36 at the minute. So can it go higher? Well, that is the question we are answering today. But first, let's have a look at the fundamentals of the stock. So it currently has a market cap of 140 billion, share price of $89, 52-week low of 61, and a 52-week high of 108. It does not currently pay a dividend. So let's get into the steps. So is the PE ratio less than the market? No, it's not. 35 to 28.5. So that is a fail. Is their revenue increasing? Yes, their revenue has doubled, 72 billion to 140. These numbers here are going to be in USD rather than Chinese yuan. Just to make it easier, Yahoo Finance has them in one and I've converted them over. So you can see it is doubled, 72 billion to 140. Next is the profit increasing. Yes, it is. It went from negative to positive 4 billion. Just want to quickly draw attention to, here it is here. You can see, yes, it has increased massively, but profit in 2020 was double what it was in 2021. So that is probably around about 8 billion. So it has decreased from last year, but overall it has been trending upwards. So definitely something to look out for. Next, are they buying back their shares or issuing new ones? They're actually issuing new ones, 1.4 billion to 1.5. So that is a fail. And finally, is the free cash flow increasing? Minus to positive 4.4 billion. So that is a pass. And I just want to draw attention to this again. Free cash flow is down from 2020. So it's around about the same, but down a little bit. And you can see we took our dates from 2018, but if we did 2017, that was around about 13 billion won, which is of course around about 2 billion USD. So it is increasing regardless, down from last year, but overall increasing. So that gives us 3 passes and has a free cash flow ratio, 140 billion divided by 4.4, which is 31.5, which is pretty close to P. So it's in line, a bit on the high side, but this is a growing company. Well, that's what we're going to find out. Is this still a growing company? We're going to be looking at the value next, and I'm going to be talking through some interesting stuff on the Buffett-Graham intrinsic value. But first, let's have a look at discounted free cash flow model. We've calculated the future free cash flows, being slightly conservative, saying 2022 is down for the time being. And then we've calculated the future one. So let's see what this gives a value of. Actually, it says it's roughly fairly valued, but can definitely go up to about $95 a share, which is a 7% discount. If we just look here, this is analyst estimates in 2021 and 2022. So they are saying they're growing. So I took these numbers and kind of ignored this one because the profit was negative. But just let's just say we're a little bit more bullish and we think that the free cash flow is going to increase every year, then in that case, it would put us at around about $105 a share, which is still a good discount right now. Next, we're looking at the Buffett-Graham intrinsic value. It looks at the earnings per share, the bond yield, and the expected growth. And you can see here the expected growth is only 3.5% from analysts over the next 5 years. So this is actually going to give us quite a low fair value of $41 a share and a Graham price of 31. I've got some other numbers here that we can see. Next year, they're meant to grow at around about 46%. So this is meant to be a 5-year, but I just want to show you the number differences here. If they continue to grow at that rate, it would give a fair value of 270 to 200. Which would be obviously excellent. The past 5 years, they've grown at 87%. If they could continue that growth, I doubt it, just because that is a lot of growth. It would be a $500 stock or a $350 stock. But if we look at analyst estimates on revenue on the low side, 5% would say it is undervalued massively. But you can see they've also got on the high side at around about 18%. And that would put us roughly in value with the free cash flow model of $90 to $120 a share. So growth estimates are a little bit on the negative side. I'm guessing that's what's happening with Baba. Even Alibaba had a very low expected growth from analysts, and I think that was about 3% as well. So maybe analysts are a little bit bearish, but the reason why I get this 18% from is because in 2022, analysts said they would get 182 billion in revenue, which was about 18%. So that's what I'm trying to get through. I mean, our revenue growth rate is at 17%, and once again, if we did that, that would put it $114 a share and a Graham price of just slightly below where we're at. So the models are saying it is a buy, roughly, but depending on what the growth rate is, the Buffer Graham either really likes it or thinks it's not a buy. But I think we're somewhere in the middle, and I think these are pretty fair targets. Let's just quickly have a look at some technicals. So we've got a 50-day in green, moving average, a 100-day in yellow, and a 200-day in red. And you can see right now, let's just go onto the year chart. We've got the daily. You can see right now that it is above all three major moving averages, which is bullish. And we also have the shorter moving average coming through the 100-day and 200-day, which is golden crosses. And you can see the 100-day looks like it's coming up as well. So in terms of moving averages, we've got quite bullish signs. Let me just get rid of both of these, all of these for now. And then we want to look at the MACD. And what is that saying? Well, very bullish again. You can see the MACD line crossed at... Well, there's actually a lot of bullish things here. The MACD, the signal line, the MACD line were at 0 and then shot up. So that would have been your buy signal. And right now they're both above 0. The MACD and signal line have crossed, but it looks like the momentum is slowing, but still bullish nonetheless. And finally, I like to look at the RSI. I had been looking at the daily, but I think someone left in the comments that the weekly was a little bit better, because you can see here it's in the overbought ranges. But if we do take this to the weekly chart, you can see that this is probably a more fair understanding of overall. It is about in the middle, maybe trending towards overbought. You can see here when it dropped down to the oversold regions, that would have been an excellent time to buy. I mean, if you look at this in 2019, when it hit its lowest, 2018, that would have been a buy signal, and you would have bought then and rose it all the way up. Here it was in the overbought regions, hit there and then drop down. So technicals overall, I say, are looking quite strong, but fundamentally the stock does look like a buy, but it looks depending on what the growth rate is, and it's very hard to say with these companies. I think they do have good room for growth, but analysts are a little bit bearish on their growth. If we just quickly have a look at tip ranks here, you can see that they have it at $106 a share, which is a 20% upside. On the lower side, around 88, and on the high side, 123. And if we just compare that to ours, well, it is pretty much in the same ballpark as well. So analysts are saying that the stock's going to go up. We are also saying the stock is going to go up, but it's not going to go up too dramatically. So there may be better options out there, but I do think this company is good. If it was an American company, it'd probably be worth a heck of a lot more. But it is, you do have to be wary with some of these stocks, because as we saw with Alibaba was growing massively, but the price was absolutely hammered when the Chinese government put the restrictions on it and things like that. So it did drop the price quite dramatically. Right, guys, thanks for watching. Please give a like on the video if you've enjoyed it. Give a comment down below what you think of this stock, and if you have any other stocks that you want me to look at. I had some comments for Disney, so I'll probably bring that video either tomorrow or Sunday night, unless there's something a bit more interesting to bring up. But yeah, right. Thanks for watching, and I'll catch you guys next time.